Zscaler has to be one of the most fascinating companies in cybersecurity right now. And if you're an investor, it's this incredible story of foresight and tech leadership. But it's also a story of really intense competition and a sky-high price tag. So in this explainer, we're going to break down the bull case and the bear case to figure out, is Zscaler really the future of security? Or are the giants of the industry about to catch up? All right, let's get into it.
Okay, so to really get Zscaler, you got to go back in time. For decades, corporate security was basically a medieval castle. All your important stuff, your data, your applications, was kept inside the company data center. That was your castle. And you protected it with a huge digital moat, made of firewalls and VPNs. The whole logic was pretty simple. Keep the bad guys out and assume everyone and everything on the inside is safe and trusted.
But then, the world changed. Big time. Our apps moved to the cloud. Our employees started working from literally anywhere. And all of a sudden, the castle was empty. Trying to protect a border that didn't really exist anymore, it wasn't just inefficient, it became dangerously insecure. And this, right here, created a massive problem for every single IT leader on the planet. I mean, if your people and your apps are just out there on the open internet, how on earth do you keep them secure? That question, that's the whole reason Zscaler even exists. Zscaler's entire vision was built on this idea that security needed a brand new architecture, something designed for the cloud right from the very beginning. And the core principle, the bedrock of that new architecture, is something called zero trust. It sounds complex, but it's actually a really simple but totally game-changing idea. You just get rid of that old concept of a trusted network. Instead, you assume nothing is safe. Every request to connect is potentially hostile, so you verify everything. Every user, every device, every single time. Security is no longer tied to a place. It follows the user, wherever they are.
All right, so let's talk about the bull case. The core argument for Zscaler is that it built a fundamentally different and, frankly, superior way to deliver security for this new cloud-first world.
So how does this thing actually work? Well, think of it less like a gate and more like a super smart switchboard operator for the internet. When you try to access an app, Zscaler steps in. It verifies who you are, checks for risks, and then connects you only to that specific application. You never actually get placed on the wider corporate network, which is how they make a company's internal apps totally invisible to the internet. It's pretty brilliant.
And this right here is the absolute core of the bull case for Zscaler. While their competitors were basically stuffing old firewall software into the cloud, Zscaler built this new system from scratch. This isn't just some minor technical detail. Investors believe this is their biggest, most durable competitive advantage, their moat.
And look, this isn't just some techie theory. It translates directly into a really powerful financial engine. You can see it clear as day in the company's numbers.
First off, just look at the size of the prize. The market they're going after is huge. The whole world is shifting to zero trust, and that's a massive replatforming of enterprise IT. We're talking about a market that's projected to be over $100 billion. That gives Zscaler a massive runway for growth.
And because of that architecture we talked about, they can chase this market with incredible profitability. I mean, non-GAAP gross margins consistently around 80%. That's just best-in-class stuff. It shows how efficient their cloud platform really is.
On top of that, once a customer is on board, they tend to stick around and spend more money, a lot more. This 114% net retention rate means that, on average, the same group of customers from last year is spending 14% more this year. That's a powerful growth engine just built right into the business.
And when you put all of that together, wow, you get a company that's in a really, really elite club. Most top software companies are thrilled if they hit the rule of 40, where their revenue growth and their free cash flow margin add up to 40. Zscaler consistently blows past the rule of 60, which just shows this rare, powerful combination of hypergrowth and high profitability.
Okay, so that's the bull case, and it's a strong one. But let's not get ahead of ourselves. We have to look at the other side of the coin. The bear case for Zscaler really comes down to two big things: this fierce platform war and a very, very premium price tag.
So the absolute heart of the bear case is this platform war. You've got Zscaler on one side saying, we're the best of breed, purpose-built engine. And on the other side, you've got its huge rival, Palo Alto Network, saying, why buy one specialized tool when you can get the whole integrated toolbox from us? It's a massive strategic battle, and customers are caught in the middle.
And that competition? It's starting to show up in the numbers. That crazy hypergrowth has been slowing down, and the net retention rate has ticked down from its highs.
This is a direct reflection of competitors being aggressive on pricing and big customers taking a much harder look at every single deal in this economy.
This leads us to maybe the biggest risk for an investor today, the price tag. Zscaler stock trades at a serious premium compared to its big, profitable competitors. So as an investor, you're paying a high price for that superior architecture and growth. But what that also means is the bar for performance is set incredibly high.
And when you look across the board at their peers, the story is the same. The takeaway is crystal clear. The stock is priced for perfection. There is absolutely no room for error. Any little stumble in execution, and that stock could get repriced in a hurry.
So this brings us to the big question, right? The core dilemma for anyone looking at this stock is weighing that powerful technological moat against the constant siege from its massive rivals.
And it really comes down to these two competing stories. On one hand, you have the bull case. This is a best-in-class, founder-led innovator with a clear technological edge and a huge market to conquer. But on the other hand, you have the bear case. This is a company whose growth is slowing down because it's in a brutal platform war, with a stock that's priced for a level of perfection it might not be able to deliver anymore.
So, which story is going to win? Well, the good news is you don't really have to guess. A smart investor just looks for clues in the data. There are very specific numbers that will tell us, quarter by quarter, which narrative is actually playing out in the real world.
These right here. These are the vital signs you need to watch. Billings growth is a peek into future revenue. The net retention rate tells you if customers are still expanding. Emerging product growth shows if they can innovate beyond their core business. And finally, cash flow margin and sales efficiency tell you if the competition is forcing them to buy growth at the cost of profitability. You can forget all the noise, forget the marketing fluff from all sides. At the end of the day, these are the numbers that are going to tell the real story about Zscaler's health and where it's headed.
Which brings us right back to the ultimate question. The entire investment case, both bull and bear, really boils down to this one thing. Is Zscaler's foundational architectural advantage a big enough, strong enough moat to fend off the all-in-one platform giants? The answer to that question will decide the next chapter for Zscaler, and maybe for the entire cybersecurity industry.